Happy Friday, everybody. Today is July 21st, 2017. As promised, I am making a bit of a video on what I'm seeing for the dollar yen here. And additionally, I have a couple other trade setups that I want to go over and just a little bit of an overview on what I'm seeing in the market right now. So let me put this video together real quick here for you. First of all, the dollar yen. Somebody had asked what they thought the dollar yen was going to do. I told him I'd make a video, so I wanted to briefly go over this. So let me zoom in a little bit here. First of all, I had mentioned this level right down in here. This was from yesterday. I had mentioned a potential bounce right here, and I wanted to go over the reasons why, and I want to talk about where this thing could be headed to. First of all, this area is a good bounce area. Why? Because we are hitting the coral, and the important thing to remember here is we were respecting coral right here. Notice we came up here, touched it, pulled back, and then we fought it for a while before we broke out. Again, over here, we really have been fighting it for quite a while over here, back and forth. Right over here, we hit it once, two, three, four, finally broke through it. So as of late, we've really been respecting the coral quite a bit. And because the market has been respecting coral here recently, it is most likely going to respect it once we get down here. So I was expecting some kind of bounce for the dollar yen off this level. The other reason I was looking for a bounce off of this level was because it is a major pivot in the market. If I zoom out just a little bit here, you can see that right here we had a bounce, came down again, bounced here, broke below it, came back up again, hit it again, fought it, came back down. We tested it over here, respected it again right over here, broke above it, came back down, pulled back down to it, took off again. So naturally, because this is such a huge pivot in the market, I did expect some kind of bounce off of this level. And this is exactly what we've seen. If you go down to the 4-hour time frame, this is interesting too. This is another reason I was looking for a potential bounce. Notice these moves down. You have a push down here, pull back, push down, pull back, push down, pull back, push down, pull back up. The thing that I want to note as we moved into these levels down here, you can see we had quite a bit of divergence. I don't like to follow divergence a great deal because a lot of times they don't work, but when you have a major pivot and you have your coral at stake here, it's probably going to bounce. So you can see as we created new swing lows down here, if I draw a line on the coral, you can see that we were making new swing highs on the coral. This is divergence. So another reason why I was looking for a potential buy down in this area. What I was expecting to see, well, hoping to see, was a bit of a stronger bounce up into this zone up here, or maybe even a consolidation sideways into the zone, because that would have illustrated a lot of weakness on the dollar yen. That would have presented a nice shorting opportunity up here, but it is so weak right now, we were not even able to get a bounce up to the coral, which is really crazy to me. But this would have been a great area up here. Let me move the moving average right up, and this would have been a great area up here. Again, we had a top here, bottom, bottom, bottom. Came back down here, broke below it, tested it here. So if we could have came down and came all the way back up with confluence of the coral, and then on the daily time frame, we would have been a little overextended up here as far as the band goes. So again, that's why we were not quite able to make it up to that level because the band was a little lower. But if the band would have been up here, that would have been fantastic confluence of a major level, the band, and the coral. So this would have been a tremendous area to short up here, but unfortunately, it was not able to make it down there. By the way, I wanted to show this on the 15-minute time frame. We did have a CRT on this trade. This was a structure CRT. If you are a current student, make sure you get the structure course so you will understand this. Actually, let me bring back the 4-hour time frame. If you follow this down, you can see a push down, pull back, push down, pull back, push down, pull back, push down. You have a double bottom here. Let me zoom in. Slightly lower low, but just barely. And then notice what happens. Price found new buyers here, and we took the last swing high out. Because that happened, This level down here becomes a structure level, and if you go to the 15-minute time frame, let's go back to it here. This is going to be the level right down here. Notice the time of day. This was the London close time frame when things are likely to bounce. Not only that, we were very close to a max move down here. And again, like I said, this is a structure CRT level down here, so very likely to bounce. And again, with these types of setups, my stop losses are a little bit tighter. Usually for a structure CRT, I don't put more than 1 to 1.5 bar stop, so this would have been perfectly safe. And the bounce was pretty dramatic actually off of this level. Again, with the CRTs, because you have the structure ones, because you have new highs, a lot of times these will actually continue to go higher and higher and higher. So there's a tremendous reward to risk on these. But in this case, you still could have made a 2 to 1 or 3 to 1 on your money easy. And then we came all the way back down to here, and someone had mentioned this to me this morning around 6 a.m. Eastern Time. They were like, should I take this as a CRT? First of all, no. This was not a max move, so definitely wouldn't want this as a CRT. The other thing to mention that I want to mention to you too is this. Notice, let's go back to the 1 hour time frame here. If you see the, okay, here's the bottom right here. You had a push up, retested the area again, higher, swing high, came back down to test it again. So this was the first time we were at the level, the second time, the third time, and the fourth time. Now, the one thing to note, I've mentioned this over and over in the course, but the fourth time at a level becomes very dangerous. So you really don't want to take buys off of that. And the dead giveaway on this one was you have a head and shoulders with the trend. In other words, when we bounced off of this the last time, we were not able to make a new swing high. So there's a lot of weakness in this pair. In fact, if anything, I wanted to take a trend trade short, but in order to take that, you need to see favorable action down there. Did we get it? Well, we came right down into this level. We consolidated. Let me zoom in just a little bit here. We came down to the level right here. We consolidated 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Broke below it. You know my rule. You get out of the trade if you take a CRT and you have not moved in your favor. If you have not gotten a reversal after 8 to 12 bars, you get out of the trade because it's probably going to break down. And that's exactly what has happened here. It broke down after about 10 bars. So this is a nice CRT2 type of setup right here for a swing trade short with the trend. Again, the giveaway was it was a head and shoulders, and we had hit the bottom zone over and over, and we just consolidated there, and we could not find any buyers, so sellers pushed prices even lower. So that's what we've been seeing on the dollar yen so far. Now, if we go to the higher time frames, what am I seeing for the future of the dollar yen? So let's go ahead and go over this here. If I bring up the weekly time frame, the first thing you should see here is we created a bottom down here. This was prior to the election. This was the election candle. And we made a massive, massive move to the upside. So to me, this looks like it could potentially be the first leg in the trend. So naturally now I'm looking for a pullback, which is what we were getting. We came down to the coral. I did mention this level on Facebook many months ago too, by the way, that this was a potential buy area. So prices came down here to the coral. I believe that was probably a Fibonacci as well. Let's take a look here. This was right around the 50% retracement mark as well. Overextended just a little bit, pushed back up, came back to retest, and we pushed again, pushed back to the upside. But what I'm seeing here, you have the top here. This is a potential reversal pattern and a continuation move up, because we did come back down to the 50%, and now we're trying to reverse up, but so far it hasn't happened. But what I see here is we have a top here, a pullback down, a small swing up, and then a second leg down. One leg, pull back, second leg. We have a pretty strong push up here. This right here, we were able to almost go up to these levels over here. Again, if you remember these levels a while back, I had mentioned, let me go back to them here. This right here, we had a bit of a left shoulder, head, right shoulder. I had mentioned in the group, if we come up to this level and we fail to break, it is going to be a massive breakdown because failed patterns produce big moves. So the market was not able to break this level after 1, 2, 3, 4, 5 tries. We collapsed. We came back up into these levels. I was actually looking for a CRT short. As I'd mentioned, anywhere from here to, let's see if I can work this a little better here. From here, I was looking for a short between 115 and 115.50. You could have went in short here a little bit early, but I want to keep the reward to risk at a max, so I did not take a trade here. We did reverse a little early. We crashed back down. We created a higher swing low just slightly. We came back up here. Now, this we kept hitting this level over and over, so this became a little more dangerous, but there is a lot of divergence as we move into these levels. You can see the THV is struggling to move much higher as we plow into these areas up here. So to me, this looked very bearish up here. I did expect some kind of pullback, and then I was thinking maybe we'll see a bounce back up and then finally a breakout, as the higher time frame does look like it's a bullish pattern. Again, push down, small pullback, second wave down, strong pullback to the upside. We have a lot of buyers stepping in here. Sellers are drying up down here. We were not able to create a new swing low, so we came back up here again. So to me, this looks very strong, but the caveat here, we are seeing a bit stronger pullback than what I had expected on this. So this is bringing in a little bit of concern that this thing could actually go all the way down to here. If this happens, we could potentially be seeing a small bounce and then a collapse. So definitely something to watch here, but I would not have expected this to come down quite so far on a retracement. The fact that there is this much selling coming into play has me a little bit concerned at this point that this may be headed down here. Now, having said that, because we had a bottom here, a push up here, a higher swing low, this is a double bottom here, and then another push up here. If we fall all the way down into these levels right down here, anywhere from 108 all the way up to 109, this entire zone is going to be a major structure zone, and the market is almost guaranteed to bounce here if we do not see a bounce before we come into these levels. If we are exhausted in price once we get down to these levels, this is going to be a huge buying opportunity. However, if we come down to here, see a big bounce like this, and then come down, it becomes much less attractive because the market has had a chance to breathe. So I am absolutely looking for a buying opportunity down here, preferably one when price is very exhausted. That will take my chances of winning this trade up. Plus, it will produce a situation where, let's see if I can go out just a little bit. No, this will not be a max move. Never mind. So, but at any rate, this is going to be, if we move into these levels, a very strong reversal opportunity. So make sure you're watching the 108 to 109, especially if we move directly down into these levels without any kind of pullback. If that happens, you are going to see a max move on the 4-hour time frame, so you would be able to get a nice little entry down in this region, and you're probably going to make a good amount of pips off of it. But again, I was looking for a potential reversal. I was hoping it would stop at Coral and then head back up. Would not take a short up here, but I would anticipate a small pause and then a break to the upside, and then I would definitely be shorting at 118. But like I said, the pullback down is getting a little bit stronger than what I like, so it's starting to look a little weak here. So we'll see if it can continue its trend down. But as of right now, I'm a little concerned this thing may be coming down here for a small bounce and then a breakdown. If we come back down to the 100 level, I will definitely be buying down here. And again, like I said, I'm looking for a buy off of the 108, 109. I would expect this thing to be bouncing soon, though. This is getting really overdone here. And if you go to some of the other dollar pairs, I want to note this too. If you go to the Aussie dollar, go to the weekly time frame. Actually, let's go to the monthly time frame. You can see we're near the coral here, which is often respected. So there may be limited upside on the Aussie. I would expect this to begin to roll over soon once we get into this region of around 82. Not really willing to take a trade just based off of that. But even if you go to the weekly time frame, you do have a pretty good pivot up here at around 82. So again, you can see the market sold off here. New lows, and so we have not retested that level. But it's a big deal because the coral is there. If I pull up the euro dollar chart, you're going to notice we are almost to the coral on the euro dollar as well. If I go to the New Zealand dollar, you can see the New Zealand dollar. This is a major pivot right here, and we're at coral as well. So a lot of the dollar pairs are getting near the coral. And again, let me zoom in a little bit here. Let's get rid of some of these lines so you can see this. But this low right here, this area where we're looking to buy, again, this is coral down here as well. Currently, the monthly is still showing some strength here with the THV still being green. But again, like I said, you're coming into major levels on euro. You've got the coral there. You've got the coral on the odd. You've got the coral. We're at the coral on the New Zealand dollar. Dollar CAD, you've got the coral down here. We are at a major pivot, though. This dollar CAD should be bouncing soon. This level was the base of this giant move up before the reversal back down. So we should most definitely see some kind of bounce off of the 124 handle. Looking at it on the weekly time frame, actually maybe a little higher than that. It looks like it's around 124.50. We're getting very overdone here, and we've had many weeks without even a test of the upper band. So we are definitely long overdue for a bounce here. So definitely not looking to short because we are coming into major support on the weekly time frame. If you look at it on the daily time frame, there's essentially no buyers showing up to the party whatsoever here. The THV is struggling to go much lower, though, so we're starting to see a little bit of divergence down here. No divergence as of yet on the MACD, but again, like I said, we are getting into a major level right down here, so this should be looking to bounce. But even if it does not bounce there, we are coming into the coral down here, and that's going to be this area right in here too. So there's a very good chance it's going to bounce at $1.20, and the $1.20 is a major psychological number as well. So we've got dollar CAD coming into bounce levels. You've got New Zealand at resistance, auto resistance, euro at resistance, the pound dollar struggling to move any higher. Not really any resistances to speak of here, but this is not looking the prettiest right now. We are already oversold, or excuse me, overbought, and we've barely moved up here, so that's a bit of a concern. And finally on the dollar Swissy, again, this is going to be the base of a potential M pattern. There's a lot of support right here, though. So, and we are at the coral down here as well on the dollar franc. Definitely not looking for this long right now, even though we are at the coral, because we did not take out the swing highs. So this could actually break down and get really ugly in the future, but I would anticipate some kind of bounce somewhere between where we're at and around the 91, 92 level here. So it has been a pretty good pivot. We bounced here off of it. You have a candle bottom right here. You had some bounces here, resistance here, support here, support here, support here. So there's been a lot of bounces off of this level down here right around the 91, 92 level. So I would expect a bounce anywhere from, actually it's, I guess, around 90 level to 92. And again, 90 is a psychological number. So we are coming into some areas on the much higher time frames on some of these dollar pairs. So definitely not looking for a ton more downside on the dollar for now. I would expect a bounce, and if the bounce is weak, then we could plow south on the dollar, and it could get really crazy. So we'll see what happens here. But again, this pattern is not bullish at all because we are failing to break out of the top here, and now we are potentially making new swing lows. So structure is saying sell. So we'll see what happens here. But yeah, this is really ugly right now. So just some things I wanted to point out on some dollar pairs. And lastly, there's been a couple other trades that I've been looking at here. If you are in the CRT2 course, this is going to be helpful to you. This right here, we were looking potentially last night, I did mention it in chat too, for its potential breakout up here. The preferred thing to see would have been a breakout after 3 a.m. In between 2 and 3, what often will happen, as mentioned in the course, you'll see a move up and then London will reverse it back down. So if you see a breakout trade like this in Frankfurt, it is most likely the price is going to reverse back down and then collapse, because this happens all the time. It's just the way the market works in the London and Frankfurt sessions. But take note again, we hit it once, twice, 3, 4. So I'm looking for a breakout. In this case, I did mention it in chat. In this situation, I did take a premature entry. I got in before the top was broken because, again, Frankfurt was likely to push it up, and then Europe was likely to sell this thing off if it did break in the Frankfurt session. So you can see what happened. We did come down and test this, and I got in right around this level. Again, we had hit it 1, 2, 3, 4, 5 times, and we were making higher swing lows. So this is a very strong looking breakout pattern. Again, you can see we're down to the 0 line down here on the 30-minute time frame. You can also see that we were green here, bouncing off the 0 line. You had the confirmation on the 30 minutes. The 1 hour was very scary, though. I usually just go up one time frame for confirmation, though. The 1 hour was ugly. That's why I thought, you know what, this may, in fact, be looking for a fake out in the Frankfurt session and then a collapse in London, which is exactly what happened. For that reason, again, I entered prematurely, put my stop right down in this region. Let me pull it up here. My entry was right around 23, so I got in right here. My stop was right down here at around 7. You can see we came really close to it down here, but we did bounce. Again, we were making higher swing highs here. Wasn't really looking for much of a break below this trend line here in the coral. And also, we may have had, was it the 1 hour time frame? Yes, there was a lower band on the 1 hour time frame, which should have held price up too. So had a pretty tight stop in here. I was looking for a 2 to 1. We came up to this level up here, 1.5 to 1. If you go to the 4 hour time frame, my exit was supposed to be right up here near this triple top. But you can see that what the market actually did was it used the candle tops as the resistance point, which was around 130.50, and then we collapsed down from that level. So I did not make any pips off of this. I should have probably taken some off here and the rest off at the 2 to 1, because I did have a 1.5 to 1, which is still pretty good reward to risk. But again, London came on and they sold price off down to the bottom. This is a great opportunity to get into a sell down here because this is a Frankfurt session fake out, and then London is likely to reverse price back down. Once we come back down to this level out here after the fake out, I was pretty certain this thing was getting ready to break down, and that's exactly what happened here. So, but again, you gotta watch these breakout trades, the CRT2 trades during the Frankfurt session, because a lot of times, like I said, they will break out in Frankfurt, and then in London they will reverse it and crash it back down after they've got everybody going long up here. So you have to be very careful if you're taking a breakout trade in the Frankfurt session, because a lot of times they don't go super far and then they reverse and rock down. So the other one was, let's see, the New Zealand dollar. This is another one. This is a powerful setup right here. Again, you saw we pushed into these levels one time, a second time, third time, and we were just consolidating sideways. Meanwhile, we're bouncing off the 0 line. A nice separation, which means there's a ton of momentum coming into this trade. What did we do? We came up here. We just sat here for a few bars. And again, anytime you sit at a level for several bars, it's probably looking to break the level. That's exactly what had happened. I was tempted to get into a trade here with a stop just below this down here. Again, this is a very, very late time of day. It is like 4 p.m. almost now, and the market's about to close for the week. So your reward to risk on this would have been probably 1 to 1 at best, because it is the slow time of day. But nonetheless, we did hit this over and over. And again, remember, when you hit a level over and over again, especially when you're bouncing off the zero line, you're likely to have a breakout. If you go to the 30-minute time frame, again, we're bouncing off the zero line. We did go green. We had 30-minute confirmation. 1 hour was green. 4 hour was green. So even the daily time frame is green. There's a lot of momentum to the upside on the New Zealand dollar. So this was a phenomenal breakout trade setup. And again, I like it a lot because we were hitting the highs over and over, and we were not making any kind of new swing lows here. If anything, we were making higher swing lows, and we were consolidating sideways. So a very beautiful trade setup. Cases like this, I will get into the market a bit early because, again, we have the separation there, and that's definitely showing us a lot of momentum on the trade. So right now we are in a market that seems to be a little crazy. You're getting a lot of big power runs like this on different currency pairs, so you have to be careful when you're taking reversal trades. You need to have massive, massive, massive levels in order to get into the market. In fact, let me touch on one of them. We were looking, if you were in the trade alerts, we were looking for a sell on New Zealand. My loading zone, or excuse me, on New Zealand, my loading zone was this up here. Again, I don't like a loading zone of more than 1 bar because then your risk is too big. But I was looking for a sell between 109 and 110 up in here. Again, 110 being a psychological level, which will create a brick wall. But again, I did say I wanted a straightaway move up here with no pullback, because then it would be exhausted and it'd be very likely to collapse, because there's almost no way you're going to break through a level like this when price is super exhausted. So I was looking for a sell around 109. We did go up to about 108.50, and we have since dropped about 250 pips without looking back. So we did miss this trade, unfortunately. But this is what's happening in the market right now. You're seeing one big move one way and then a big reversal the other way. It's getting very, very dangerous. So make sure if you're taking a reversal setup, you're watching for areas that are brick walls. I am not calling any trades that are not extreme levels of support or resistance because of the nature of the market right now. And if you go to the weekly time frame, the one thing that I did want to notice, or I did want to note here, is here was the last swing low. We came all the way back down. So this is indicating there's still a lot of sellers here. That's why this area was an extreme area of resistance. The other thing I want to mention too is we had a bottom here, double bottom, new swing high up in this zone right here. So there are new buyers coming to the market. That means this is a structure CRT, and it is almost guaranteed to bounce down here because it is a structure level. So this area, if I go back to the daily time frame in the alerts, we were watching for this level down. Actually, I had the base down here, and then you had a significant level here, and the absolute earliest entry I was looking for was right here. Again, you had a bottom here, bottom here, bottom here. So anywhere from 103.50 to about 102.30. Market should definitely not go much below this level right here. But again, if you look at this right here, this was a shoulder, this was a head, this was a shoulder. Markets usually reverse at the shoulder, not at the head, because this is where the most of the buyers are positioned. I came just a few pips shy of this shoulder, and then we took off about 500 pips. This was a buying opportunity down here of a lifetime. I really, really wanted this trade down here, but the market would not cooperate, and it's been doing that a lot lately. It's coming just short of some levels, but it is better to wait for your levels to be hit than to get in prematurely, because if this does continue to get up, your reward to risk on this is very bad. So be patient. Just watch the market again. Stick to structure levels. Stick to major areas of support and resistance. And make sure you're watching for trend trades right now, because this is the nature of the market that we are in right now. And of course, if anything changes, I will definitely be sure to let you know about it. But anyways, just wanted to throw out this video today because we've been seeing some really interesting price action, and we're definitely coming into some major zones on a lot of the pairs. So Anyways, have a great weekend, guys, and we'll see you on the next video.